Welcome to TradeTheMBI.com. This is John. This report is for the 24th of August, and that slow grind across as we talked about the consolidation. A little difficult with there just being zero short interest right now to drive price up with new shorts. It's got to be done with buyers, and unfortunately at this point in the month you usually don't have a significant portion of them, barring some strange event that would call them back into the market. You're just going to have this soft ebb and flow, back down, up again. Everyone's just going to be testing the supports and then doing a little add-in, sell a little, repeat, rinse and repeat, I think is what the typical term of it would be. You can see that pretty similar now with the S&P and NQ or NASDAQ on their trajectories. I think if we look at that DOC a little closer back on the S&P, you can see that you've got orange slightly above steel. The problem with that is you didn't get that big opening that we talked about in mouth opening, like right here, where they separate cleanly. This is just pretty much static, and with the rising red, it's just enough to give support. But you can see big difference between the two, with the steel still well above orange, haven't even connected. So much more bullish as far as the viewpoint from a NASDAQ standpoint that you would have from S&P. And of course, early rally here on the euro back above that top band, pushing into the more elevated territory, which definitely supports the S&P to the higher side. There have been some rumblings with Italy and that, but I think by and large people think that it isn't going to amount to much. And as long as Turkey doesn't fall apart completely and spread any contagion fears, just going to keep plugging away as things are. Plenty of people are choosing treasuries, even domestically, despite foreigners selling. I know you had Russia completely liquidated. China gotten a little softer, though that's often misleading. But the push has been to encourage Americans to buy U.S. treasuries. Go figure. And oil, still at the upper side of the range, but still consistent within that range. So pretty stable expectation as to inflation for now. We are starting to see some articles about rising wages. That will become the key going forward, because that is really going to be what would drive any kind of cyclone of inflation. Otherwise, we're pretty much in a even killed. And if the Fed decides to raise rates, which clearly the minutes indicated that they were leaning towards coming up, then I think we're probably going to experience a mixed bag. You'll have some that will want to pull back, others will want to buy the equities because of the inflation aspect. But the question is how much of a detriment it does to the economy as far as driving it. I mean, if the economy is so robust that it just moderates it a bit, then there won't be too much anguish over it. The real question becomes, how much is necessary, and do we really need to go back to the days of 5, 7, 9% in interest rates? People will often argue that we do, because the way that money is created has changed with the electronic capabilities. So things are just different now. Our intraday setups aren't very different, though, because as we were talking about before, when we were going through the video report, we're saying, hey, above 50%, be interested in looking for that to the long side. We did that. We went to the 100% off the gold candle here. That it started below the 50%, but under strong little buy configuration with the green dots developing right underneath it as it was turning right around, and that did drive it. So it was a little bit of an unusual one, because normally at this point usually you're thinking straight back to zero line, which we'll see in just a minute, but quite a convergence there. And then we got the positive extreme, so we knew our retrace level was already filled back in pretty much right after it made those highs, but still continued with overall rising shakeout until we reached a nice strong separation right there of the orange and steel. Similar thing happened when you look at this one as well. The difference for it, it just didn't produce any dramatic decline, as it just kept staying soft, in the sense that the orange immediately rejected and you didn't get a further decline. Here you had a strong move with the exact same orange configuration. this point, you actually had, from a peak level, a shakeout, a dip. And so even if you had taken the first one, still there was nothing wrong with that one, as long as you were getting closer to the 100% mark, which would have been right there. It means you would not have taken much heat on that one anyway. And then boom, the cascade all the way down to the 100%. And then it started to make even another low. And it was really getting close to filling this positive extreme that we were talking about from the couple of days ago. We ended up with gold here right around the 38%, but really sluggish as far as the DOC, in the sense that you're not getting the spikes below with the orange. Nothing dramatic from the reset standpoint, and still plenty of shorts as we moved above zero, and that's what brought it back down. And when we came back down all the way to the zero before we completely reset, right about the 23% right here, and that's when it started to get some traction. And now we're starting to see some of the dot configurations here as we're at the 100% off gold candle, and probably fester around there. It just means we're pretty much in the same range throughout, but we're at the high side of it. So all in all, strong stuff, and still decent range. Even from here, when we got down, it was down in the 20-point range for a move. It still gets to be reasonable. Well, in this particular case, we went from, what was it, only 10 or so, 68 to, well, the low came all the way down to 54 range. So, well, that's still right around the 20. It's not bad. You're not going to get all of it, but still, it was a pretty easy read for quite a bit of that move until we dipped with the green underneath the negative 20 there. Is when I start to look for rebound power. It took quite a few bars, because there was quite a few bars underneath the red zone, and of course we tested that on the higher extreme right here, so it's easy to compare those two setups within each other. So that's the long and the short of it. And again, I'll keep posting up those charts. We put up quite a few the other day that really were reflecting how things were headed. So worked out pretty much as expected. We'll see now that summer gets near that end. I think that we're going to probably start getting more of the political aspect, and that's really going to be an interesting driver as to where real money wants to go. And we're going to see that much earlier than everybody else, so that will be exciting. As always, though, trade well, and we'll talk again later.